Well, February natural gas futures are ticking higher into Friday, carving out a classic technical setup that will likely determine whether the broader downtrend resumes or gives way to a sharp counter-trend rally. Meanwhile, the EIA confirmed that last week's storage report was pushed from December 24 to December 29 due to the Christmas holiday. Early consensus estimates are looking for a 170 billion cubic feet withdrawal, well above the 5-year average draw of around 110 billion cubic feet for the same week. Beyond the EIA storage report and weather outlook, traders were also focused on production trends. U.S. dry gas output was running at 113.2 billion cubic feet per day as of Friday, up roughly 7.9% year-over-year. On the demand side, lower 48 consumption came in at 87.5 billion cubic feet per day, down 3.2% from last year. Meanwhile, analysts pegged net LNG feed gas flows at about 19.1 billion cubic feet per day on Friday, essentially flat on the week. Looking ahead to the week ending January 2, price action is likely to be driven primarily by the weather outlook. Colder early January temperatures are expected to partially offset bearish supply fundamentals. The latest forecast updates show a colder shift for December 31 through January 7 across the northern and eastern regions. The bullish weather outlook also lines up with the weekly chart setup. While the developing closing price reversal bottom does not signal a full trend change, confirmation could still spark a 2 to 3 week counter-trend rally. Such a move would likely retrace at least 50% of the recent slide from $5 to $3.50, putting the $4.25 zone in focus as a near-term target. Notably, the 50-week moving average sits near $4.41, reinforcing this area as key resistance. A return into the $4.10 to $4.40 range is also likely to attract fresh short-selling interest unless colder weather extends beyond January 4. Prices could push through this zone only if forecast models continue to trend colder. Keep in mind that most professional traders are already positioning off the 10 to 15-day outlook. If upcoming forecast updates fail to confirm a sustained cold shift, the broader downtrend should reassert itself, with prices gravitating back toward the $3.50 support area. If you enjoyed the analysis, drop a comment, hit like and consider supporting the channel. It really helps keep things moving, and see you next time.